Hello, this is Brian Shannon from AlphaTrends.net. It is Thursday, the 19th of June, 2008, and the S&P 500 saw a bounce of 35 cents today, or about 1/4%. As we'll see in a moment, it lagged the NASDAQ, as it has been pretty much all year. But the S&P 500 didn't make this bad print down here. What we're seeing is what it looks like just a little bit of stabilization as it tests this low from last week at 133.5. When we look at a 10-minute time frame, there again is that bad print. Let me just change this scaling so we can diminish the importance of that. But you can see that this market came up to approximately that declining 5-day moving average and this first area where we'd seen a prior little level of support being formed at 135. That acted as a place where we found some sellers today. I think getting back above maybe 135.5, then we're going to avoid a further decline in here that would add to that low right here and create a lower low. As we've been discussing, this market has this series of lower highs and lower lows. Here, this is the most recent lower high. If the market breaks back above that, then it looks like the market will need to consolidate a little bit more through time rather than continuing with the trend lower. We have seen 1, 2, and this being the third drive lower, but this time without a lower low, at least yet. The path of least resistance still remains lower. 1 day's bounce doesn't change that. But if it's to get above 135.5 or so, then perhaps we're going to see a test of 137. So keep that in mind. Tomorrow's options expiration day. I'm not going to be trading. I'll be at that trade show out in Ontario, California. And for the people who've contacted me, I'm thinking that probably tomorrow evening, that is Friday evening, that I'll try and arrange something so we can get together. I'll try and post something on my blog. I think that'll be easier than calling you on your phones, as I had requested your cell phone number. So keep an eye or take a look if you can at some point tomorrow after noon Eastern, and I'll kind of try and organize something. But for now, the S&P 500 looks like maybe it's trying to stabilize a little bit in here, and it was helped today by a $3.75 drop in the USO. The USO continues to be in this range of 106.5 up to about 113. We're still very much in a solid uptrend here, but perhaps this uptrend is tiring. So you've just got to be aware that if it is to break down from here, then there's a possibility we could see a quicker move. If we take a look at the more recent trading in here, for instance, the VWAP, the volume weighted average price, since the last time the trend line was tested right at that point, let me just draw that trend line in. So what I did was just draw the VWAP from here over. So the average price since the last test of the VWAP has been at about 108.5. So if we take it back a little bit further and say from this high right in here, the average price is right there at about 107, 107.15. So right about where we are. So this market, the USO, we do see a declining 5-day moving average. A lot of times that means that it's not going to continue higher immediately. In order for this market to really begin the next leg higher, it's going to have to get above 113. And for a more meaningful pullback, below 106.5. So it remains trapped within this range overall, but within the context of a much bigger uptrend, and odds don't favor shorting. If you're a super aggressive trader, who can handle the risk, then maybe you want to get involved in these shorter term moves as it rallies up to the daily VWAP like we saw here, and then breaks down through this little very short term level of support. Nice drop off in there. But really, I don't think that the odds favor short sales in here. Of course, a reversal can come any time, but being as the primary trend is higher, it's it's much more difficult to pick a turning point than it is to participate in a trend if and when it resumes by breaking out past 113. The Russell 2000 was up 61 cents. This market, again, really, in order for the big trouble to begin, we'll have to break below that 71.75 level. And that would suggest possibly a move down towards $70 based on that measured move we talked about yesterday, where the height of this move would typically equal to the height of that move there. Now, what would nullify that right now is a movement up past that 74.20 level or so, where we see that declining 200-day moving average. We're getting mixed signals with the 10 and 20-day moving average, so we're just kind of chopping around in here above a rising 50-day moving average. And there just seems to be a lot of bearishness out there, that a lot of times the market won't decline when you have all these headlines talking about global market meltdowns and that sort of thing. But we're clearly still at a very important juncture on the weekly time frame, and here on the daily time frame. We've got that battle for control still being fought heavily. It's encouraging that the volume was heavier today as it found support at that rising 50-day moving average, but I wouldn't really consider it more than a very short-term trade that is bullishly until this market can get above and hold above 74.25 or so. Above that, that would change the tone of the market a little bit, but we've still got that larger time frame looming, and the larger term trends are exert a lot more force. So you've still got to look at this market as a short-term trading market. When we look at the 10-minute time frame in here, we failed to continue to break lower, so that's encouraging as well. And we've got short-term, we broke past a little bit of resistance at 73.50. If that can hold, maybe this market can continue to add to it and head up beyond 74. But we've got a lot of mixed signals overall from the larger time frames. If you look at the NASDAQ 100, this market continues to struggle with this rising 50-day moving average, but with a declining 10 and 20-day moving average, you have to just be very suspicious in here. Big volume in here today as well as it reversed off there, so I think it caught a lot of people off guard, and that's what stops are for. Obviously, this market came right up to this level where it's had some recent supply that is recent resistance here at the $49 level, breaking above and holding above $49 a share though, and then we've got the possibility that we see the shorts get squeezed up to about $50. And if you look at this, what we've got is we've got a rising 5-day moving average in here. We've got this low here on heavy volume. We've got a higher low over here, so we're starting to see, and you can look at this and say, is this a cup and handle? Or, so someone else thought maybe this was a inverted head and shoulders pattern. The point here is that it looks like the buyers are getting a little bit more aggressive price-wise because we have a higher low on the short-term time frame, and also time-wise. We saw that it took about 4.5 days for a test of this $49 level. Now it's only taken 3 days before it got back up to that level. So they're getting more aggressive price-wise with the higher lows, and time-wise with the more frequent tests. So you've got to look at this and see that on the 5-minute time frame, for instance, we saw this little pattern of lower highs and lower lows. That was interrupted as the market got back above this 48.30 level. It did so on an increase in volume, followed by low volume in here, and then we had a nice little surge here at about 1:30 p.m. Now, if the market can get above and hold above 49 for 30 to 60 minutes or so, then it puts the next level of potential resistance into contention, which here again we're seeing this hourly time frame. Perhaps we're going to see it rally back up to $50 a share. It remains a tricky market. I get a lot of emails from people being frustrated from being back and forth, up and down, one stock going up and then 2 hours later it's going down. Shorten your time frames. Remember that defense wins the game, and when the market shows signs of reversing, have your stops in place. Listen to the message of the market. The buyers were getting more aggressive in here through heavier volume, and you have to listen to that. You can't stubbornly hold on to a short position because the 20-day moving average is heading lower or whatever. The only thing that pays is price, and that should be your master.